Automated Podcast.
Welcome to Automated. I'm your host, Mark Verbenkov, and in this weekly podcast, we will be exploring the impact of emerging technology on jobs, society, as well as us, with business and technology leaders, researchers, and independent professionals across the world. So over many of this podcast episodes, we've of course looked at automation and the potential job disruptions resulting from it. And really a number of immediate solutions come to mind, like universal basic income and reskilling centers. In a few of the earlier podcast episodes, I looked at these proposed solutions that really tried to deal with the worry of automation swallowing up current and, of course, future jobs and the potentially displacing millions of people. But one proposed solution which has gained traction a few years ago and is less well known, I think, and really not talked about yet on the podcast is something called a robot tax. So this idea got a lot of traction and press in 2017 when Bill Gates was promoting it as an idea, as a way of kind of easing the transition towards a more automated world. He argued that it is a powerful way to slow down the wave of automation in order for society to deal with the repercussions that have been, I think, extensively covered in this podcast already. The idea gained more than just ideological purchase and had some implementation, but I'll cover that near the end of the episode. But to start with, let's look at exactly what a robot tax is. So the essential idea is to tax businesses that implement robots that take human jobs, as those human employees can no longer be taxed, resulting in tax revenue loss for a national government. So the resulting proceeds from the tax robots could then go towards making the replaced human workers more relevant and competitive in the job market by, say, investing in or setting up reskilling centers and different kinds of programs like that. There are some questions as to how it should exactly be set up, which leads to some ambiguity of the exact definition. Namely, each robot could be taxed based on the displaced employee's salary, or a company could pay an overall higher rate of corporate tax coming from the profits that are likely to increase due to the robot being implemented in the first place. So also the definition of a robot here includes AI as well as digital bots, and not just the kind of industrial robots we typically imagine when we say the term robot. However, the act of defining what a robot actually is does lend itself to some complexities when considering edge cases like even certain manufacturing tools that fall outside of the obvious robot examples, but still have that kind of automation potential. Not to mention modifying the tool or the robot itself to kind of get outside of the actual definition of what the robot is that would be set up for this robot tax. And this might enable companies to, as I said, avoid such a tax if it were to be implemented, or at least push to not even be initially included in the tax to avoid kind of any reduction in profits. So let's kind of look at the overall arguments for and arguments against a robot tax that will kind of build up on what was just mentioned. So the kind of main argument for adopting a robot tax, which I mentioned right at the beginning, would be to slow down the wave of automation to enable a society to adapt to the disruptions in employment. Subsequently, programs could be funded to support employees finding relevant work through like reskilling centers, and ultimately a UBI scheme could be funded through such tax revenues, or at least this has been proposed. And actually one of the largest problems related to work and kind of the changing modern labor landscape that I think hasn't really been given enough attention on the podcast itself is the growing speed of technological change and its impact on people, forcing them to change jobs or careers if their profession is automated. So the skill set that they have gained may actually no longer be transferable to a new occupation. An easy example to understand here is truck or taxi drivers. So when self-driving vehicles are finally mass adopted, there will be little to really no need for these type of skills anymore that drivers typically use. And this will be forcing the future job seeker to reskill if they want to remain relevant in the workforce anymore. It has been argued that this disruption will happen faster and faster as technological development grows exponentially, which is why the robot tax is initially so appealing, as it really offers the potential solution mainly to this number one concern. But there are some critical flaws to the tax that have been pointed out by others. And there are really two main arguments that go against a tax for robots. As already mentioned, the difficulty with defining what a robot actually is, especially for the kind of outlier cases, can lead to all sorts of loopholes and companies avoiding a robot tax altogether. And this would also increase legal cases, the amount of legal cases, the amount of regulation, and more bureaucratic processes to deal with its implementation kind of overall. So the other main concern is the unequal opportunity it would generate between those countries that have adopted it versus those that don't. So here's a quote from one of the articles that I was reading for this. Unless all countries on Earth adopted a robot tax, you run the risk of robotics companies moving their operations from countries with a robot tax to nearby ones without. Instead of getting money from robots and slowing their deployment, the country with a robot tax could lose out on the cash and cause the development to occur elsewhere. And I think that, so apart from this being, I think, a very clear argument against a robot tax, this idea is also tied to a potential innovation slowdown. So if companies don't outright move to a different country and they fear a robot tax, they might actually become less willing to invest in or even develop new technology because of it. And this would naturally lead to stagnation, which by many measures is a key driver for social growth and social benefit. So there would be repercussions beyond just the technological industries that would be under question. So these are kind of the boiled down arguments for and against a robot tax. But I think something that's actually quite important to look at are some of the actual events where a robot tax was considered or implemented. And this mainly occurs in one place. So to date, South Korea is the only country to implement a first robot tax. However, it is a little different than what has been proposed in that it actually reduces tax breaks to companies by 3 to 7% that were previously given to companies for adopting or investing in robots. So this was passed in 2017. And unfortunately, there's little information on how it has changed or worked over the last 5 years. But from all accounts, it seems to be still in practice and hasn't significantly been altered in any meaningful way. More relevantly, though, there haven't been any new countries to implement a robot tax since. And South Korea is still listed as one, if not the most automated country in the world, and recently had its highest GDP level in over 11 years. So it doesn't seem to be that the country was impacted negatively from the kind of altered robot tax as many argued it would have been. So in another case where a robot tax was actually proposed but not accepted, EU lawmakers had actually proposed a bill that would implement a tax on robots as part of a kind of more broad ethical framework for the development and deployment of robots within the EU. So though the bill, this kind of overall ethical framework bill, was passed, a specific amendment was made to remove the robot tax issue. I think one of the main reasons that this happened was because that there was a lot of pressure from the industry as well as robotic associations that were arguing many of the arguments that were brought up in the podcast, but generally that innovation would go down, GDP would go down, there would be tremendous financial consequences for imposing such a bill. So that's why it was removed. And apart from that, there weren't too many other serious moves to actually implement a robot tax. There have been, of course, many other notable figures like Bill Gates, even Stephen Hawking, that wanted to impose or at least start to bring about the acceptance of a robot tax. But there were also many detractors, as there are with any issue. But in the years since the kind of debate was raging back in around 2017, there hasn't been that much push for having a robot tax implemented. But if automation continues to expand, as I assume it will, do you think that a robot tax is the solution, part of the solution, or is actually only going to contribute to more problems than it might actually solve. Well, that's it for this week's episode. Thanks for listening. If you like what you hear and you want to support the podcast and the conversations here, the best way to do this is to go onto Apple Podcasts and leave a review, as it helps the algorithm to reach out to new listeners and brings the show to them. Also, feel free to check out the website, automatedpodcast.org, where you can find the show notes for each episode, written articles on the themes of the podcast, and a library of resources on the topic of emerging tech and automation. Also, if you want to reach out and leave any feedback or you have any questions about the podcast or any of the conversations, there are general contact links such as email, LinkedIn, Twitter, etc. for you there on the website. And finally, for those of you that want more than just an audio conversation, the video recordings are now going to be up on YouTube for the newer conversations, so feel free to check out the videos by searching for Automated Podcast on YouTube, where of course you can like and subscribe if you prefer to support the podcast that way.
The Automated Podcast.